Presented by eBix Cash. हर खुशी के लिए काफी है.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take you through the headlines. Market snaps two-day winning streak as Nifty gives up 18,250. Sensex down over 200 points. Metal, banking stocks drag. A day after Business Today TV told you that cryptocurrencies could go legal, a special report on the biggest challenges ahead. Maruti refuses to commit to the electric bandwagon, says the current volumes in the EV market do not excite, even as profit dips 65% due to semiconductor shortages. The IPO of PB Fintech to open on November 1st, price band fixed at 940 to 980 rupees per share. We'll get you a conversation with the management later on the show. Google CEO Sundar Pichai confirms JioPhone Next launch by Diwali. Pichai excited about partnership with Reliance, saying that the phone will drive digital transformation in India. Yesterday, we brought to you the exclusive news that a legal framework for cryptocurrencies is in the offing and that the government is set to bring laws to regulate the sector. The key questions that arise include whether cryptocurrencies will be treated as an asset and how will the trade be taxed. Business Today TV has this special report for you.
Two crore investors and counting. That's the number of people in India who have reportedly jumped on the crypto bandwagon. Even though the wagon is traveling on a road that is yet to be mapped out. There are three big issues the government has to address. Number one is the big one. Will cryptocurrency be treated as a medium of exchange or simply an asset? Number two, will cryptocurrencies be taxed as an asset class like other commodities? And number three, what safeguards are needed to prevent frauds in a tech-driven, fast-moving landscape? If treated as currency, imagine paying for coffee through a crypto wallet on some future date. If the currency rate has changed, not only will you have to pay a capital gains tax on the purchase, but also a transaction tax. A nightmare for tax authorities.
For it to be treated as currency, I think that entire framework will have to be brought in, saying that the local currency is not the only legal tender, but we will allow. So I think that the bill, hopefully in the parliament right now, will hopefully address this issue of how it is going to be treated, and if it is treated as some form of an alternate currency, then this issue will go away.
What's more, cryptos, as they exist now, are anarchist in nature, with developers deliberately keeping them out of the purview of currency regulators and sovereign governments. Even the securest of blockchain systems can be gamed to commit frauds, as was the case in the theft of $660 million in April this year.
It has to come with number one caveats for suitability. Second, it has to be solid enough as a technology that it can't be gamed. And thirdly, even if it's solid technology, the anti-fraud provisions and what happens if fraud or theft occurs. I think these three will have to be in place for crypto to take off as a mainstream currency. Right?
China has already made it clear that it will not allow cryptocurrencies. Given that India is one of the fastest growing markets for cryptocurrency investments, whatever policy framework it ultimately finalizes will leave its mark worldwide. Bureau Report, Business Today Television.
Lovai Navlakhi, MD and CEO, International Money Matters, joining us now. Great to have you with us and really want to get your expertise on how these regulations will evolve. Lovai, tell us, is there a way to efficiently tax cryptocurrencies if they were to be treated as a legitimate asset, given the kind of framework that the government or regulators seem to be putting together? What do you think is going to be the likely course of action?
So I think if, the cryptocurrency is treated as legitimate, it is quite likely that anything other than equity in the Indian context typically gets taxed as, as one sort of group, which is like debt taxation, which means that you might need to hold for 3 years and only then it will become long term. While it is short term, you will be taxed as at your income tax slab. So it will get added to your income. Once you cross 3 years, hopefully you will get a 20% capital gains tax, but with indexation. That's what I'm thinking. But at the moment, it's not even legitimate. So one will have to wait and see what happens there.
It's an industry where things are changing so rapidly. Is there a way to really keep track when it comes to some of these changes? How will the regulators look to safeguard interests of the small investor when it may actually be quite challenging to keep up with the pace of change when it comes to cryptocurrencies?
Yeah, I think the one issue that will be there at any point in time is that whenever a new product comes in, first you will get creativity and you will get innovation and new products. And then you suddenly realize, oh, it's running away, it's becoming too large. And now let me start bringing in regulation. It happens in all industries and finance is no different. But the issue is going to be that the regulator will need to understand the product, how it works, what is the interest of people, how prices move. But without having that understanding, anything which sort of goes up very sharply, they will think of it as speculative and therefore clamp down heavily on it, I think, whenever they do first bring it into the legitimate sort of cauldron.
Lovai, thanks so much for joining us and taking us through some of the implications of cryptocurrencies coming under the regulatory purview. A bout of profit booking ahead of the monthly derivative expiry on Thursday, dragging markets lower today. Nifty ending down 57 points at 18,211. Sensex closing at 61,143. That's down about 200 points. Profit booking across selective banking heavyweights, dragging the Nifty Bank lower 364 points to about 40,874. The broader markets managed to hold on to some marginal gains today. Pharma stocks saw some good tractions after a long phase of consolidation. Divi's Labs, Cipla, some of the gainers there. We also had SBI Life, UPL and Asian Paints making up the list of gainers. IT, healthcare, even telecom saw some stocks rising in trade today. On the other hand, metal, energy, oil and gas, that's really where we saw most of the correction come through. Even an Axis Bank today was down about 6.5%. Bajaj Finance also from the financials. ONGC, Tata Motors also in the losers list today. Slight uptick in the India VIX, up 0.5%. PB Fintech, the parent company of PolicyBazaar, all set to launch their IPO on November 1st. The firm is looking to raise 5,709 crore rupees from its IPO. It will consist of a fresh issue of 3,750 crore rupees and an offer for sale of 1,959 crores. The price band for the IPO is set around 940 to 980 rupees a share. I caught up with Chairman and CEO Yashish Dahiya and whole-time Director and CFO Alok Bansal. Listen in to an excerpt of that conversation.
I think you made a very interesting point. It's not just for our investors, but also for our own sake. We are also investors in the company. I think after the IPO, I will be the largest individual shareholder in the company. Alok will be the second largest. So we don't want to not make profits. We don't want to be wasteful. And we are not institutions. We are individuals. Both of us come from middle class backgrounds. Yeah. None of us have anything besides this company. So we are quite certain we are not going to be wasteful and we will grow the business in a prudent manner. That said, if prudence is in growth, then not doing it would be lack of prudence. right?
Okay.
And I think so we will definitely stay that course. And I think we've demonstrated, right? If you look at the entire gamut of what's been happening in the internet over the last 7-8 years, you would struggle to find consumer internet companies which have been built up with $70 million a piece, up to the valuation that we have. Like, all said and done, we burned $140 million, and we have a valuation of $6 billion.
There's curiosity as to, okay, how much is it going to take to really expand the business? The quantum of funds that are going to be used to drive that over the next few years, just how you're seeing things and what you factored in.
You're totally right, Tara. See, in terms of marketing, the amount that are mentioned in the DRHP, 1,500 crores, that includes, first of all, 3 years. Second, both the brands, PolicyBazaar and PolicyBazaar.
Okay.
And online marketing and brand marketing all put together. So we have been spending in that ballpark per year anyways. And as the revenues continue to grow, as a percentage, that will continue to come down. It's come down over the last 3 years also, and I think that trend, as Yashish mentioned, will continue in terms of, but actual number may not change. Actual number may actually, meet the inflation. But in terms of the percentage, it will definitely come down.
That IPO opening on November 1st. Now that the JioPhone Next will be launched by Diwali, it's been confirmed by none other than Sundar Pichai himself, the CEO of Google. Addressing an earnings call from the US, Pichai also detailed the company's upcoming plans for India. Listen in.
We've also made progress with the Made for India affordable smartphone co-developed with Reliance. The JioPhone Next device features premium localized capabilities and is on track to launch in market by Diwali. Obviously, the pandemic has been hard, but through it all, people are looking for access, and there's definitely been a wave of people who have adopted smartphones, and there is still, we see the demand for people looking to shift from feature phones to smartphones. And so part of what excites me about the upcoming partnership with Jio in building a phone is really investing beyond just English and getting languages and getting the local needs right for people, and doing it in a way that many more people can take advantages of a smartphone.
You're with us here on Business Today, and it is our special segment, Ask Udayan, this Wednesday. The show where we answer all your stock-specific questions and queries. Our global business editor, Udayan Mukherjee, will be taking some specific queries on this segment, where we decide what some of the best strategies are at a time like this when markets are trading at those record highs. Do keep sending in your questions to the number on your screen, and we'll answer some every week as promised. Let's begin and take some of our viewer queries now. Our first question today is from Rayan Yusuf. He's from Bengaluru. Listen in.
Hi Udayan, my name is Mohammad Yusuf. I'm from Bangalore. What is your view on Coal India at this market level? It went up to 200 rupees, now trading at 176. Is it a good buy? Thank you.
Hi Yusuf. Yeah, it was a very quick rally and an unexpected one at that. Coal India moved up very quickly and quite uncharacteristically from 150 to 200 in just a matter of a few days, and therefore there has been a pullback. I think the pullback has partly been because investors have realized that the government has told Coal India that it cannot do e-auctions of coal right now, and it has to divert most of the coal it produces to the power sector. It cannot sell to the non-power sector, and particularly through e-auctions. Now, investors always realize that e-auctions is the more profitable and higher margin sales for Coal India, and because of the diversion away from the auctions, Coal India's profits might take a little bit of hit in the near term. But I think this is a temporary issue because come winter, by December at the latest, I think Coal India will get back to selling coal through e-auctions once again. So this setback per se has probably been the trigger for profit taking after such a sharp run up from 150 to 200. Coal India, from a valuation point of view, looks quite attractive. I mean, there is no denying that. I mean, it's a 40% ROE company trading at a 6 PE multiple, and it has a 10% plus dividend yield, I mean, which is among the highest that you see in Indian stocks. So if you look at it from that point of view, and the fact that Coal India can grow its profits by about 25% over the next couple of years quite effortlessly, it looks like a compelling buy. And I think if you're a tactical investor, which means that you're looking at it only for say 4 to 8 quarters, you could probably stay invested in Coal India at these kind of price levels, because it is possible that because the market's focus has now shifted to the cheaper stocks, that Coal India will give you a run up maybe even to 250 kind of levels. But if you're a real long-term investor and you're looking for longer-term wealth creation, I would suggest that this is not the sector to be in, because the coal and coal-powered power companies like NTPC, these are yesterday's stories. The world is moving on to renewable energy, and sooner or later they will replace both generators of coal and coal-powered companies, energy companies. So I think tactically at best, you could look at Coal India, but from a long-term perspective, I think the fact that it's so damaging to the environment puts it in a negative investment list.
Okay, well then our next query is from Ashwin Kumar, who is from Mumbai, and he has a question on IRCTC, which is interesting given the kind of action we've seen on that stock. If we take a look post-listing, of course, but also just in the last week.
Is it a good time to buy IRCTC stocks?
It's impossible to time this one, because the movements, as Abha just mentioned, have been so fast that I think it has taken the breath away, knocked the breath away from investors. Because I think part of the problem is that IRCTC had an absolutely vertical rally in the month of October. I mean, in the start of October, it was around 4,000, and suddenly in a matter of 15-20 days, it went up to 6,000. I mean, that's a 50% rally in less than 3 weeks. And thereafter, there has been a major fall from 6,000 back down to 4,000 levels. So in a matter of 4 weeks, a stock has gone up from 4 to 6,000 and 6,000 back to 4,000. I think there was a lot of speculative activity in IRCTC, and which is unwinding right now. I don't know what was the trigger that pricked the bubble. Maybe it was some kind of rumor in the market that IRCTC will be merged with RailTel, and which is something which investors are very cautious about. Maybe that is the one which led to the unwinding of all the speculation on IRCTC. And it had become too expensive. I mean, a stock like IRCTC trading at nearly 90 PE multiple, I don't think it was sustainable. Even now, after the correction at 4,000, the stock is trading at about 70 kind of PE multiple, which is very lofty. So I think the stock may need to cool off a little bit more. But the story is good. I mean, it's in internet ticketing, which is growing. The catering business is growing. We discussed this stock a few weeks back, and even their bottled water business is quite strong. So once you get the stock back to where it was, say, in the early September levels, which is 3,300, I think even from a valuation point of view, it can be justified. And at those kind of levels, if you're a long-term investor, you could consider looking at the stock. It's not a recommendation to buy the stock, but simply to point out that let this volatility subside, let the stock find its own level and settle down a little bit, and then you could do the valuation math once again and consider it.
Nitin Mittal also sharing his query from Lucknow. He's a long-term equity investor, and with markets at all-time highs, he's got some queries with regards to some of his investments.
Hi Udayan, I am a long-term equity investor. Since markets are at all-time high, should I stay invested in blue chip companies or book partial profits? Thank you.
It's the most difficult question to answer, sir, now, because, if you had asked me this question even 3 months ago, I may have been tempted to say that you could probably book partial profits and you would have missed out and not been very happy about it. This is a market which has surprised everybody with its absolutely continuous strength on the way up without even pausing for a meaningful correction. So my guess would be only that it's getting closer to a correction. Heaven knows when it will happen and whether it is just round the corner, or it can rally on through Diwali and maybe keep doomsayers and correction callers at bay. So it's impossible to time. But if you are, as you said, you're a long-term investor in blue chip companies, I don't think you need to panic, because even if there is a correction and you can take that correction in your stride, maybe eventually, maybe 3 months out, 6 months out, your portfolio value will be higher, even taking a correction or the current levels into mind. Sometimes in a strong market like we are now, it pays to sleep through corrections, because eventually you end up holding and making more money. But if you are the sort of investor who would panic because markets correct, then I think it may be equally wise to take some profits, as you mentioned, maybe take out 15-20% of your portfolio and keep that powder dry in the event of a correction. But you must realize that you cannot time this correctly, and the moment you take profits and you keep that cash, it is possible that for a while your portfolio will underperform compared to being fully invested in the market. So I would say the time is such now, maybe it is prudent to take a little bit of profit, but do not get out of the market completely. I think that would be a mistake.
Wise advice. All right, we've got time for one more question. Monica Chadda, who's from New Delhi, listen in.
Hi Udayan, could you please share your views on Polycab India for the time horizon of 2 to 3 years?
That's a good time horizon. I mean, 3 years is a good time horizon. And I mentioned this because Polycab is an interesting company. It's trying to make a transition. Traditionally, it's as you know, I'm sure, that it's a cables and wires manufacturer. I mean, that can be seen, while Polycab is a dominant player in that business, it is seen by many as a slightly stodgy kind of business, a business to business kind of a company which sells wires and cables, and you have its peers like KEI and Finolex in the market to choose from as well. The interesting bit is that Polycab is using the cash which is thrown up from the wires and cables business to move slowly to what they call the FMEG segment, which is the fast moving electronic goods, the things that we use at home, consumer electronics. Now, the fun part is that the valuations which are accorded to a wires and cables business are obviously much lower than the valuations which are accorded to a consumer business, consumer electronics business. So Polycab is trying to basically straddle the spectrum between a Finolex KEI on one side and maybe a Havells or a Crompton Consumer, those kind of companies on the other side, the valuations of which are quite disparate. One's low, one's high. Now, admittedly, that the FMEG business is quite new, and therefore it's only 10% of the overall revenue mix of the company right now. But over the next 3-4 years, if Polycab can make a successful transition and this consumer business becomes, say, 20% of its overall revenues, that has implications for its overall margins, and it has implications for the valuations the stock might command. Some part of the re-rating has happened already, but I think this company, if corrections like you had the stock at 2600 just a while back, it fell to 2200. That may have been an opportunity. So if you see a correction and the stock gives you entry points closer to that 2000 level, I think for the time horizon that you mentioned, it might be an interesting one to look at.
All right, it's time to wrap up the show. Remember, if you have any queries, do send them in to us, and we'll ask Udayan every Wednesday. Udayan, thanks so much for taking the time out to answer those very specific stock market queries. See you again next week on Ask Udayan.